The internet loves Elon Musk. The fanboys are everywhere. Hell, we've even made a few videos about him on our channel. His personal PR is amazing. Somehow, despite being the most wealthy person in the world, he still brands himself as being relatable, someone that we could sit down and have a beer with, someone we could trust. But recently, I've begun feeling a little differently about him. Wealthy people have a responsibility to come by their fortunes honestly, and some of Elon's recent actions make me question his motivations. It seems like he says and does things for his own personal gain. In this video, we're going to highlight some of the times Elon has willfully manipulated financial markets for his own or his company's gain. So let's dive in. First off, let's define market manipulation for a second, just to set the stage for what we're going to talk about. Manipulation is specifically the act of inflating or deflating the price of a security for personal gain. It's usually fairly challenging to manipulate the market, as there are so many players in the game that one actor's efforts are usually not enough to shift the tide. However, in Musk's case, he has a global audience and enough money to actually cause major shifts in the market if he were to make moves. Elon first ran into trouble with the SEC in 2018 when he tweeted, "Am considering taking Tesla private at $420, funding secured." Now, there are several reasons why this tweet is a completely irresponsible statement to make by the head of a publicly traded company. For starters, it's illegal for executives to give shareholders misleading information about important corporate events. Stock price aside, this leaves investors in a strange position. Should they take this information seriously? How close in the process are they to making this decision? It adds uncertainty into the marketplace, which means investors are making decisions based on unverified information. He then went on to double down on this market manipulation with several follow-up tweets which added even more uncertainty, because it further made it unclear how close the company was to making the decision. In response to one Twitter user named Gail, Elon said, "My hope is all current investors remain with Tesla, even if we're private. Would create special purpose fund enabling anyone to stay with Tesla. Already do this with Fidelity's SpaceX investment." He also said shareholders could either sell at $420 or hold shares and go private. He then replied to a Tesla tweet saying investor support is confirmed. The only reason why this is not certain is that it's contingent on a shareholder vote. Almost all of this information was false. According to SEC complaints, Musk had never actually had going private conversations with a funding source at $420 per share. He also had never actually verified his claims that investors could stay invested in the company if it went private. And furthermore, his statements made it falsely seem like the company was ready and able to go private as soon as he deemed appropriate and a shareholder vote took place. This is incredibly reckless at best and insidious at worst. You may be thinking, what is the significance of the price point, $420 per share? Well, Elon did some really big brain math on that one. He simply took the existing price of a single Tesla share and added 20% on top of it. Incredibly enough, the lunacy doesn't stop there. According to leaked Instagram messages between Azealia Banks and Grimes, Musk's girlfriend, the calculated price per share was only $419, but Musk rounded up to $420 because he wanted to make a weed reference for a laugh. Need I remind everyone watching this that this is the head of a publicly traded company? This sort of childish behavior is not becoming of someone who investors are supposed to trust. So how did the market react to this? Well, obviously, the price popped off. Investors reacted to the idea that the going private price was 20% higher than the current price, and the volume of trades increased dramatically. On August 7th, the price closed nearly 11% higher from the previous day. Why would Musk do this? Besides just wanting to see the price of his company go higher, Elon also had a keen interest in one particular group of investors, short sellers. Earlier that year, Musk had tweeted several interesting things about short sellers. On May 4th, he tweeted, "Short burn of the century coming soon. Flamethrowers should arrive just in time." And on June 17th, he tweeted something even more cryptic. They have about 3 weeks before their short position explodes. This tweet already sounds a little bit like manipulation to me. He is clearly signaling that he knows insider information that is going to hurt short sellers in the near future. Needless to say, the SEC took Musk's actions incredibly seriously. Musk had to settle with them and pay some fines, but it was mainly a slap on the wrist for him. Musk had to step down as Tesla's chairman and be replaced by an independent chairman. Note that this does not mean that he had to step down from being CEO. He also had to appoint 2 new independent directors to the board, and establish a committee and put in place controls to oversee his communications about Tesla. Also, both Musk and Tesla had to pay $20 million fines apiece. To me, this punishment was not severe enough for such obvious market manipulation by Musk. Whew, that was a long one. Up next, we have Musk's involvement in the GameStop frenzy that happened in January. For those that aren't aware, GameStop had a massive run-up from a share price of $3 in early 2020 to insane highs, almost $500 per share, in January 2021. This was largely fueled by Reddit's Wall Street Bets message board taking positions against the short sellers of the stock and causing a massive short squeeze of the stock. But Elon Musk had some key involvement in the massive run-up of the price. Remember how Musk famously hates short sellers? The previous evidence in this video should be enough to convince you that Musk has a keen interest in seeing short sellers fail. He also has a vested interest in maintaining his public image as the people's billionaire. So when he caught wind that the short squeeze was fueled by retail investors, he had to get involved. On January 26, he tweeted, "Game stonk," with a link to the Wall Street Bets forum. At the time of this tweet, the close price was $147.98 per share. After hours trading of the stock spiked rapidly, and the next day, the stock opened up at a share price over double that amount, $354. To say that Musk influenced the stock mania would be an understatement. I'm not claiming that Musk was personally invested in GameStop. In fact, I don't think he was. If anything, he bought a few shares just to fuel the frenzy a bit. But I also think that this is the sort of tweet that shows that he has fairly reckless abandon of the social norms that are expected of a CEO. In my opinion, he has an obligation to the public to not use his influence to manipulate the market in any way. Furthermore, he used a current trading event to further increase his public image in the eyes of some of his biggest fans by shilling their stock at the moment that they needed it most. Sure, maybe he didn't manipulate the market for monetary gains, but he certainly manipulated the market for gains in public influence, which for someone in his position is arguably just as bad. DogeCoin is a joke cryptocurrency. It was never created to actually hold value and was created to be cheap to transfer and cheap to own. Its prominence as a cryptocurrency was mainly fueled by internet memers and online forums. After the January GME frenzy, many investors were angered by the manipulation that occurred by trading platforms such as Robinhood. They were looking for an alternative, somewhere that they could make massive gains quickly, in some cases to offset the losses that they took on GME. Cryptocurrencies look particularly attractive because they are decentralized. Since 2013, Dogecoin's price has remained fairly flat, with relevant pumps whenever the crypto market starts to take off. But after January 28th, the price of Dogecoin skyrocketed more than 600%, largely fueled by our very own Elon Musk, who tweeted, "Dogecoin is the people's crypto. No need to be a gigachad to own." Musk has denied that he has personal ownership of Dogecoin, and has even stated that his posts about Dogecoin are mainly meant to be a joke. He stated via the app Clubhouse, "The most entertaining outcome would be that Dogecoin becomes the currency of Earth in the future. Occasionally I make jokes about Dogecoin, but they are really meant to be jokes. Dogecoin was made as a joke to make fun of crypto, but fate loves irony." Still, Musk's involvement in the classic pump and dump scheme around Dogecoin is dubious at best. As a public figure, he should be incredibly wary of contributing to such schemes, as they typically leave unwitting investors in the lurch as they are left holding bags of worthless securities after the pumpers have exited. He's even been actively accused of tricking his followers on Twitter. One Twitter user says, "I spent all of my school money on Doge and I sold at a loss. Please, Elon, don't trick others like you tricked me." But to say that he doesn't own any Dogecoin is false. He tweeted that he bought some Dogecoin for his toddler son, X. But what Musk has done with Dogecoin pales in comparison to his manipulation of the king of cryptocurrencies, Bitcoin. Musk has repeatedly said that he owns no cryptocurrency. In 2018, he tweeted, "I literally own zero cryptocurrency apart from 0.25 BTC that a friend sent me many years ago." In fact, he's even been somewhat of a detractor. But recently, he seems to have changed his position on cryptocurrencies in general, and Bitcoin especially. On January 28th, he changed his personal Twitter bio to #Bitcoin. This caused many Twitter users to speculate that he had increased some of his personal holdings in the cryptocurrency. The result of this speculation? Bitcoin's price surged nearly 20%. Such a simple act had massive implications for the market. Since then, Musk has tweeted several different opinions about Bitcoin, all of which have had some impact on the price. But perhaps the biggest issue I have with his involvement in Bitcoin is that, after all this posturing about Bitcoin on Twitter, on February 8th, it was revealed that Tesla had taken a $1.5 billion position in the cryptocurrency. Since that announcement, Bitcoin's price has soared. And as of right now, the price is sitting at around $55,000 per Bitcoin, up nearly $10,000 since their announcement. When asked why Tesla invested in Bitcoin, Musk seems a bit lukewarm on the subject, saying, "Having some Bitcoin, which is simply a less dumb form of liquidity than cash, is adventurous enough for an S&P 500 company. When fiat currency has negative real interest, only a fool wouldn't look elsewhere. Bitcoin is almost as BS as fiat money. The key word is almost." But it seems to me like Musk used his personal platform to pump the price of the currency between January 9th and February 8th, when it was revealed that Tesla had holdings. The sad thing is that unlike in the stock market, there are currently no laws in place about market manipulation in the cryptocurrency space, which means it's likely that Musk broke no laws at all with his public comments about Bitcoin. But that doesn't make it any less wrong. In my opinion, he's doing the same thing we've seen him do time and again. Use his public image to manipulate the price of a security for gain, whether that gain be monetary or influential. For Musk, those two motivations are practically the same. In the end, Musk is a public figure, and public figures have to be careful about what they say publicly because it has massive implications for the rest of the world. Musk has repeatedly commented on securities, and it has gotten him into trouble. The funny thing is that Musk just doesn't seem to learn his lesson, and it seems like he's snubbing his nose at regulators and everyone else. For some reason, he still has this aura of the people's billionaire, despite all the evidence that he is really only interested in personal gain. When it comes to choosing our public messiahs, I think we can do a bit better than Musk. He's an excellent businessman and tech entrepreneur, but his actions border on criminal, and one day, it's gonna catch up with him.